Hey guys, welcome back. In this video, we are talking about why we will gamma squeeze the shorts, Citadel trying to cover short positions, why $400 is a fair price, and many more in this video. First, we're taking a look at this. It seems option sellers are in the process of covering those AMC calls that ended up in the money Friday last week. Now, what we saw starting this week was obviously the bullish volume coming in for AMC. Now, the reason why this is happening is something that's relating to last week. Going off of last week, when AMC was given a max pain of $2, we saw how people thought that AMC was going to go below or towards the $2 area. Now, what ended up happening was, of course, AMC closed at the price of $2.55. And so not only did it not go to $2, it actually also closed above the $2.50, meaning the $2 calls and the $2.50 calls were in the money. Now, we know that obviously for the counterparty, they then have to be the obligations for them. And this is why we were seeing the bullish volume kicking in for AMC. And going off from there, we already understood in terms of how people are still doing the same thing, where now people are eyeing up a higher strike price for AMC. You're looking at volume coming in for $3, for $3.50, and for $4. So we know that when AMC closes above these areas, we're going to be looking at a similar sort of movement, but on a bigger scale. And this is why the shorts are, of course, trying to manipulate AMC as of right now. We have to understand exactly what's going on. We have to understand the pressure that we are obviously exerting towards these people. Currently, there's a big call wall at $3 on AMC, 102,000 call contract. Market makers sold all these contracts and are short 102,000 call contracts. So the longer the time passes, the more gamma rises and gamma risk on them, forcing them to buy on the lit market. And this is what we talked about with how being the counterparty, they will have to fulfill this. And this is what we talked about with how more and more pressure are being exerted towards these short sellers. Remember that not only are people buying the $3 calls, but there is also volume coming in and piling on the $3.50, the $4, and even higher. What that means is that when we do see AMC close above $3, when we do see that sort of movement happening and we see this gamma squeeze ongoing, what essentially it's going to do is closing above $3 will allow the pressure to push AMC up. It will then close above $3.50, and then even more pressure are then being built, and that will continuously obviously build on and then be an ongoing kind of thing. And that's what we talked about with the pressure that's ongoing. That's what we talked about, how we can gamma squeeze the shorts. And already as of right now, we're already seeing how we're applying this effect. Remember, the very fact they couldn't get us towards the max pain last week is showing how they're already weakening with the manipulation and suppression. This is because of the liquidity issues that they are facing, but you can already see from there how it's becoming more and more of a struggle for these guys to manipulate AMC, and why we're going to be looking at the real price discovery very soon. Now, it doesn't mean that there is zero suppression. Like we've said, we are seeing a weakening in how they're suppressing AMC. But they're obviously still trying to find other ways to manipulate the price. You can see today, 14 minutes before close, you can suddenly see the volume kicking up for AMC, large amounts of sell orders coming in. Now, right now, we understand that this isn't done by the retail, because we know that retail won't collectively sell AMC towards the market. And we know that this is the short sellers. And there's a big reason for why they do this. We've seen them do this in the past before. We've seen them in terms of trying to push a bad narrative on AMC. This is just an example of that. Another big thing for this is because they want to, of course, drag it into after hours, where that's actually when they do the buying. What we've typically seen is that any effect they can have on AMC that has a negative effect, they will do it in the lit market. They will do it during market hours. Anything that has a positive effect, meaning when they do something that will actually push the price of AMC up, they will try and do it whether it's in the dark pool or it's in the after hours, where it doesn't actually then have any impact on AMC. So here, they're trying to sell a lot of shares because they know that it will bring the price down. But what they would then do is buy back all of the shares they've sold in after hours, where they still have the same amount of shares, but they were able to bring the price down. And in the after hours, when they buy it back, they don't actually bring the price back up to where it was. And that's what they try to do continuously. And there's a big reason for this is because they still want to push this agenda that AMC is failing, that AMC is going down, and therefore you should sell your AMC shares. By the end of the day, we've seen from the filing recently that they want to buy as much AMC as possible. You can see here, the AMC critics are real quiet right now. The company is improving its fundamentals, ticket sales are climbing, and the stock price is moving. The short thesis on AMC looks more dead every day. This is what we ultimately said. When you take a look at the filings, when you take a look at everything that's ongoing, you're going to be looking at institutions buying. Yes, they may be selling some shares. Yes, they may be trying to do these sort of movements all the time during market hours. But this isn't because they actually want to be net selling AMC. What you'll typically find is that some of these guys who are selling AMC still have a large majority of the AMC shares, or in the very near future, whether it's in a week's time or a month's time, you will see them buy back not only the shares they've sold, but plenty more on top of that. And what we talked with the short term as well, it's how they're doing this just to manipulate the price. The reason why they try to manipulate and decrease the value of AMC is because they want to buy as much AMC as cheaply as possible. They want the retail to sell so that the institutions can pile in. But when we ultimately take a look at what's ongoing for AMC, when you take an ultimate look at the fundamentals, you know that it's improving, you know that it's going up. So for years, the crooks have tried to sell us that movies are dead, AMC will never turn a profit. But the fact is that movies are breaking every record. AMC is going to turn a profit. We are far from bankruptcies. And this is how we know we're deep value. And on top of all of this, it's why institutions want to buy as much. Also, what you're seeing here right now is we're seeing recently how articles have been forced to change their narratives on AMC. But what's even more interesting is what they're trying to title AMC. AMC Entertainment spiked 7%. Is this a short squeeze in progress? Now, another article where we see that AMC Entertainment spiked 7%. What's moving cinema stocks today? So the interesting thing about this is that firstly, we are seeing how these guys are forced now to acknowledge AMC. And I think that that's a very good thing. It's because AMC is doing so well that they can't just straight up and lie about AMC anymore. Yes, there are still media articles that do that, but the majority of them realize they can't just talk about AMC badly anymore because AMC is doing so well. What's even more interesting is how they're titling AMC. They realize the potential that AMC has, just like we talked about with the article, titling it in terms of the short squeeze. This is because they understand not only is AMC doing well, where it's going to reflect a true value, but all of the synthetics, all of the naked shorts that have been created in the past before to manipulate the price of AMC will eventually have to pay a price. And that's when AMC is going to short squeeze. And they can see that right now. It's why we're seeing the institutions trying to buy as much as possible. You can also see here how other short sellers are struggling. Citadel argues the intervention could shift the market response to concern over the fiscal outlook and inflation into the currency market. Now, we've already seen how this has become a big issue, but let's talk about more how it's affecting Citadel. Essentially, Citadel wanted to liquidate its short positions in the treasury futures at the cheapest possible prices. But after the repurchase treasuries to prevent treasury prices from falling, Citadel calculations went wrong. Since it couldn't liquidate at low prices, this would have widespread impact on margin call, leaving Citadel no choice but to transfer its risk to other markets. So let's really understand this here with what we talked about, how they, like Citadel, these short sellers, they have been having problems. You may not see it because they're not vocal about it, because these media articles don't talk about it as much as they do about AMC. But the truth is that they are struggling. And just like what we talked about with Japanese yen carry trade, it's definitely had major effects on multiple different institutions out there. Now, it's of course had an impact on Citadel. And you can see how this already has impacted the margin, the collateral, is why we talked about asset prices going up, is why we talked about assets like crypto going up. It's because these are all things trying to recover the collateral that was lost in other areas. And just like what we talked about with what Citadel has done recently, and you guys can see here, in terms of, this was the playbook by Citadel, talking about emergency rate hike. Then what that caused was crashes and liquidations. Then there were no rate hikes. It reaches out to buy liquidated hedge fund portfolios. It buys billions of situational awareness holdings, says AI bull case is intact, markets rally, sells the AI stock into the buying pressure. Now, this is what we said with how when these institutions claim things, they're not doing it for the benefits of people like you and me. They're doing it for the benefits purely for themselves, despite whatever they claim to be. Now, with this, with what we saw them do, with the whole reasoning of trying to liquidate these hedge funds, then buying it for pennies on the dollar, then selling and scraping it apart when saying that, this is going to be the next massive industry again. It's all because they were running out of liquidity. They were running out of margin. They were going to get margin called, so they had to do this. And this is what we talked about with how these short sellers are desperately trying to cover AMC right now, but they realize they can't. So the only thing they can do is buy into as much AMC as possible and hope that retail sells all the AMC. And so when we talk about how AMC can go to, these $400 price targets, when we talk about how we're going to gamma squeeze shorts and then into short squeezing the shorts, it's because of things like this. As always, this is Financial Advice, and I'll catch you guys next time.